Good morning, everyone. It's 8:01 a.m. Chicago time on Monday, the 14th of November, 2016. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So the key news overnight was driven by the releases from Japan and China. Japan's industrial production beat by a wide margin month on month, 0.6% versus 0%. Expected prelim 1.5 year on year, 1.5% versus 0.9%. GDP also beat in Japan. Q on Q GDP came in at 0.5%, matches a 6-quarter high, and then that was expected to be at 0.2%, so it almost tripled that. Analyzed GDP came in at 2.2% versus 0.8 expected, and so it's pretty strong releases there overnight. The market's been trending up overnight, and then it turned around. It turned around before the European Open. Industrial production in China came in at 6.1% versus 6.2, and overall just showing strength across the board. I don't know if you've been following, but the bond market, actually not only in the U.S. but across the board, have been getting hammered with yields rising. The 10-year is up 12 basis points at 2.27% and increasing. It's at its highest level since the beginning of the year. Bonds around the world are getting hit hard, as I said. In South Korea, the 10-year spiked 17 basis points to 2.11%. Italy's 10-year leads the advance up 15 basis points, 2.17%. We'll see a chart of the bonds here in a minute. The US dollar also crossed 100 for the first time since last December. So these are all things that are telling us that a change, there's change afoot, and apparently it's hard to tell, and I don't really pay too much attention to the whys, what the gurus are saying as to why this stuff is happening. But the market's clearly expecting a move by the Fed in December and pricing that in. And also the U.S. election has had a tremendous impact on that with the market expecting inflation to come back. So those are the things that are likely driving us. Now looking at where money flow is, we have a mixed market. The crude oil is getting hit. December crude's trading at 42.82, down 1.34% or so. The Japanese yen and euro FX are at the bottom of the advancers versus decliners list. The Japanese yen is down 1%, 1%, that's pretty big, and the euro's down 0.8%. The Nasdaq is showing a loss currently from Friday's close, where the S&P, the Dow, Eurostoxx, and DAX, and the Russell are all positive on the session still. So it's a mixed soup here. We're likely to see some continued volatility into this week. And as far as what we've got for the week, since it's Monday, the key releases this week, we have Draghi speaking today at 10 o'clock Eastern. So look for comments there. We also have a parade of Fed speakers. We have Fed Speaker Kaplan at 1:20 Eastern, Lacker at 5, Williams at 6:30 p.m. Tomorrow, Germany's GDP is coming out at 2 Eastern in the morning, U.S. Eastern, and then we get PPI, CPI out of the UK, as well as business inventories in the U.S. Again, we're going to get more ECB and Fed speakers tomorrow. ECB Speaker Lautenschlager at 3:30, 7:30 Eastern, we have Fed Speaker Rosengren, ECB Speaker Nowotny at 1, and Fed Speaker Fisher at 1:30. On Wednesday, PPI in the U.S., and then we get a slew of numbers, of course, industrial production, cap utilization, NAHB housing prices, housing market index. We get crude oil on Wednesday, and tick flows as well in the afternoon. We have Fed Speaker Bullard on Wednesday, and Fed Speaker Kashkari and Fed Speaker Harker. So you get my drift, right? So, and it continues on with Thursday covering CPI and more ECB speakers on Thursday, and then Friday is very quiet with just a leading index. Excuse me, leading index, and then Friday also gives us Draghi. Sorry. And Friday gives us Draghi, Fed Speaker Bullard, and Fed Speaker George. So get your Fed lenses tuned in for this week. It's pretty crazy. Um, Yellen testifies at 10 a.m. on Wednesday. Let me see where that is on the calendar. Let's see. Thank you. I don't see that on my calendar for some reason. That's been missed. Okay, so that's what's on deck for the week. Pretty busy week. In weeks like this week, you want to keep your powder dry and keep save your bullets throughout the day. Try not to take a position and fight it for the entire day and kind of take yourself out of the game early. So this is what we're looking at. As far as what was expected on Friday, here's our primary hypothesis. The key element of Friday's trading was the expectation for a sideways open, and we're looking for a downdraft, as I show with this arrow drawn on last Friday's video. Oop, where'd it go? Yep, drawn on last Friday's video. And then I was looking for it to break this 47.75 double bottom and then to start bouncing back up. And it couldn't do that. The low on Friday was around 48 something. It could not quite push to the double bottom before it turned up. So we ended up following hypo 1 on Friday to a large extent. The second hypo was for it to push down as we opened. The expectation was for it to push down almost immediately, and then to turn around and rally with the expected target of around 2170, the prior day's point of control. So that's what was expected. Here's what we actually got. This is a 2-tick Renko of Friday's trade. We had a very wide opening swing. You could see here it pushed quite far on the opening swing. We had about 6 points, and then we started the downdraft expected by hypo 1, but we just could not get to this 47.75. We stopped right at 48.50 before we went corrective, impulse, and then pull back, and then continued. And then on Friday, it basically finished neutral. Can't quite call it neutral extreme, although it did finish on the extreme, but it finished inside of the initial balance, inside of the first hour. Friday's close was at 2161.50, with 2161.75 being the initial balance high. But you could see here that this was very much as was expected for hypo 1, with a push back up. But the market was pretty sluggish. Neutral up. The way this closed on Friday, with the amount of balance beneath it, we expect it to continue higher in the overnight session, and it did. So when we look at the overnight session, it ended up following the normal convention of what we expect the auction to do here. The market immediately opened yesterday, and I watched this open. It just kept pushing higher and higher and higher, and ended up pushing to 2173.75. And by the way, because we closed at 2161.50, the most common range up from that close is 2171.50, and it pushed to 73.75. So it pushed through by a few by a few, and then ended up rotating. So it came back to 74, 74.50, and then with Europe, the market just rotated and started to push lower. As we see here with a little bounce, this looks very, very precarious. The overnight session is appearing to be fairly still unsteady. It's going to be hard to tell. When we were down here this morning, the expectation was for a pullback to the open and then continuation lower, and for us to open in value right here in value and in range of Friday, um, which was not what I expected coming in. I expected us to actually be higher, but now it's bouncing up, so it's kind of hard to tell what it's trying to do. 2170 is the point of control. In the overnight session, a fair amount of volume went through, not as much as the prior sessions. The prior session had 362,000 contracts traded. Current session 277. It's still it's lighter by comparison. A quick step, side step here. So this looks like a messy chart here. Let's clean that up. This is your 30-year bond, 30-year Treasury bond, US, and this bond was making really strong gains on Brexit and has been sitting sideways for quite a period of time, from about the beginning of July all the way through to the beginning of September. Then it finally broke through, went back to the point of control of this mess here, pulled back right back to the point of control, and then became impulsive down and has since dropped. This is a big move on the bonds here to the downside, pushing yields higher. Remember, if the price of the bond itself goes down, the yield or the percentage value of the bond, the payout of the bond goes up, right? Because the coupon stays the same. And what I see here is key is we moved from the consolidation zone up here to about the point of control, to about the point of control of the consolidation zone down here, and we have stabilized until the election was done last week, and then we gapped down. We started falling pretty hard here. So we've driven through this big consolidation zone that we had at the beginning of the year, and it looks like the market, as I said, is pricing in inflation. So something to pay attention to that is likely to be the driving theme, the driving theme going forward. So this looks like a messy chart here, and it's getting quite noisy. But what I've done here is I've moved the profile for the last few days over. The key areas to watch is that 47.75 double bottom down to 43. This area here is really important for buyers to hold. If we end up testing there, I am likely to be a buyer on a move down here on the first try. The market is currently trading right up here at 2165.66, and we have a lot of volume beneath us. So the expectation this morning is for us to open out of range, become responsive, push back down to the 2150, 57 or so, the point of control of this region. The point of control and the stats for this is 57 and a quarter. And so I'm looking for, let's get rid of that second profile. So I'm looking for a responsive down into the point of control eventually today, and for it to settle down in here and then make an attempt higher on the close. That's my hypo 1. Hypo 2, I'm looking for, again, an open auction, a push lower into value high, unable to push through, and then it starts to drift up to 2171.50, and then to continue higher. The market looks like it wants to start pushing through new highs. The extent of today's move is likely to be 2180 if it holds around 2161 or 62. That's how things are shaping up for Hypo 2. Hypo 3 is a complete cross. I'm looking at an attempt early to push higher, finds sellers, pushes into the prior day's range, bounces at the point of control, then starts to walk down and then potentially take out the 2147.75 before it bounces back up on the close. That is the expectation for hypo 3. We would need to see some we would need to see some uh, bad news for that to happen. I'm just not seeing the news is a lot rosier than people expected on the Trump win. So we'll see how the market starts to feed in. There was a big interview yesterday with Trump on 60 Minutes on CBS where he revealed a lot of his plans, and I think that there's more and more of that's going to be analyzed and released in the news feed, and that's really what's dominating the news right now is the unknown that comes with a unique president coming into the the political and economic scene. Anyway, I'll leave you with those thoughts. Good luck today, and I'll catch you tomorrow morning. Good luck. Take care.